Hey, what's going on this Tuesday?
Hey, let's start the show. Hello, thank you, Scott. Hello, Andy. Hey, everybody.
Hey, Steve. Hi, Scott. Hello, everybody.
Yes, the show now is what is it? I always forget. Bi-weekly, semi-weekly, every other week. The
Bye, week.
Tuesday, the Tuesday webinar for the trade of the week is now on every other week, and here we are. So we'll get started here. We've got the date correct. All good. Thank you, everybody, all the regulars that are showing up and letting us know you can see and hear okay. Good to see you. All right, so we'll get started. Just a reminder that Andy and I have been using this product a very long time, and we use it in our own personal use. We're also employees, and we're going to talk about some stocks, but anything that we're talking about is not really designed to be financial advice for you and your family. If you need that, you got to go seek out the professionals who have the licenses for that. So disclaimer aside, just a reminder that we do try and help everybody with the learning curve. It's a very popular program, but it's got many layers to it, and it's not always something that's easily, grasped in 24 hours. We always tell, that's why we do our test drives for a good solid 2 weeks to really let people get their feet wet and understand how to get from the program what it is they're looking to get. Whether you're a low float scalper or you're a slower swing trader, you can custom tailor and make it work for you. So the way in which we make it available, or we make ourselves available to help you guys shorten the learning curve, is pretty much, daily Barry's live trading room. And he's in there Monday through Friday, pretty much from bell to bell for the most part. And then we will give him a break in the noon Eastern hour. And one of us will take over from him and kind of just give a different set of eyes to the market and a different set of explanations for people who might be looking for some support on how they want to get it. But those happen every day at the noon session, 12 p.m. Eastern, daily. And yeah, there's the link right there. Just to remind you that the trade-ideas.com/live is a redirect link that gets you to the live noon webinar. It's basically a live stream on YouTube. So once you've been there once, YouTube knows that you like it. It'll serve it up to you every day around noon Eastern time. So that's the easiest way to get there. And like I said, we do our best to try and help everybody, shorten their learning curve on this great product. And it doesn't happen overnight. All right, so that brings us to the typical theme for this week is humans and machine combined, no matter what the industry is, energy, medicine, finance, the algorithms and the technology works best hand in hand with a human being. And I'm actually going to demonstrate some of this today for some of the content. I'm going to go back through after Andy pulls a couple of select trades out of the AI. I'm going to go back through all of them, and I'm going to show people really the human and machine concept and how it can be improved based on just relying on the machine. So we'll have some real-time, real-world examples to try and drive that theme home, that the best relationship is a human and a machine, because by themselves they're just not as effective. We're a pretty good team, and that's just the way it is going forward in the world. Okay. All right. So let's get started here. I'll save the agenda for what's coming up. I'm going to start with the basic market recap. I think the last time we spoke, we were probably somewhere back in here in the spies, going back in time, and we were in clean air. We had low volume, just drifting higher. But since then, and I'll just highlight this day right there. That was the day right there that probably should have held if this market really wanted to just continue to do what it was supposed to be doing. A nice washout and a close right there at the 10-day moving average. And then the following day was a fake out reversal. And then we got that big volume candle that just broke through a couple of barriers in the SPY last week. And then we chopped around for a little while. But as I exclaimed yesterday or last week, I'm sorry, in Jamie's webinar, it bothered me that the price action was still under the armpit. What's the armpit? The armpit is that rolling over of the moving averages. And until the price can get back above that armpit, it's under pressure. So fast forward to this week, Friday was a doozy, and Friday actually gave us one of the first closes, except for this one back here, below the 50-day rising moving average that we've had in a while. And remember, we almost laughed about it, how how much clockwork this thing was like, bouncing off the 50, and wondering on Friday, was this little slip here on the banana peel, was it going to hold, or what was it going to bring? Well, over the weekend, it brought some real carnage, or some real technical structural damage into the market, and so now we're really under pressure. And being under the armpit, as I called it last week, kind of was an early warning sign that the market was, it didn't do what we were seeing back here: bounce, V bottom, bounce, V bottom, bounce. It was playing some games and kind of testing the waters under the armpit. And so come in Monday with a giant gap down, and pretty much all of the selling all day long. Didn't recover yesterday until the last 3 candles. And we gapped up today and chopped around, but lo and behold, when it was all said and done, we really gave a lot back. So we've got another menacing red candle here, definitively, again, under this rising 50-day moving average. And the same kind of thing is holding true for the NASDAQ over in the Qs. Matter of fact, that was kind of the lid yesterday, was the underside of the 50. And, the NASDAQ hasn't necessarily been under. We were under back here for a little while, but, we'll see how this resolves. I'm really watching the 50-day moving average, especially in the NASDAQ here, and how yesterday it kind of capped out. It seems like there's a real lid on the price action. And I'll go back to the SPYs again. Some damage was definitely done, and the market is now kind of guilty until it wants to prove itself innocent. But we've got a real steep fall drop now there in the 10 SMA. And, in a day or two, this 10 SMA might have something to say when the price action gets, in the neighborhood again. We'll see. But a lot of damage was done in the last few days. Pretty big volume yesterday as well. I mean, that's just outpacing the volume by 5 or 6 to 1 with what we were kind of having there in the slow summer doldrums. If I look at the IWM, this is the Russell 2000. It's also having its bit of frustration, and this thing has been, hopefully not what the market is intended to do for us the next 6 months, but it's just been a sideways grind in small cap land. It's been very hard. And as of note, the very last moving average that I do plot on my charts here is the 200-day. Very different from what the S&P, the SPY, and the Qs looked like, but the IWM, the Russell 2000, is now parked below the 200-day, and that really hasn't been the case for quite some time. It tried it over here for a day, half a day, and popped right back into play. But now we're going to just kind of, see what happens under the 200-day. But we don't really base it off of the IWM. Really, the S&P is where most of the tea leaves can be read, for lack of a better expression. We don't have it's not all technology like the NASDAQ. It's got its financial, it's got some tech, it's got some energy, it's got retail. So it's kind of a broad-based brush as to how we want to take a temperature of the market. And I'm just going to say that, that last week chopping below the armpit really was kind of a foreshadowing for the weakness that we had today. But you can subscribe, or you can apply whatever you want out there. When the markets are tired and they're ready to sell off, they're going to find a reason. If you want to find the reason of the Evergrande, or I can't remember the name of it, the land debacle over in China. People are kind of wondering, is China going to bail them out like we bailed out AIG and everything over here that was too big to fail back in 2008? Or are they actually going to let market forces do its thing and have creative destruction? We don't know yet. I think the Feds are also meeting again this week. They're probably going to find a microphone here shortly. But the damage has been done. The price is significantly under the levels that we were keying off of before. So, to borrow my friend Brian Shannon's phrase, the market really is guilty now until proven innocent. And what's it going to take to get it back into play? It's going to take all these moving averages, messing around with the price, but the price is going to have to get back and close above those moving averages, much like they did back here and back here and back here to prove. So we'll see what happens, but shots were fired. There's a warning shot across the bow of the market. Let's see how it fares. Now, you want to lay the 200-day moving average. I'll just draw a horizontal line, or I'll just draw a line, essentially, like, for the most part, maybe some of these areas. This 200-day moving average could come into play real quick, but maybe that's not the worst thing in the world. I mean, in the bigger scheme of things, that's not that bad. I mean, we have been on an artificially driven, liquidity driven market since they've thrown everything but the kitchen sink at it down here. And this market is due for a good bath. It's due for a good shower, and a pullback to the 200-day really is not out of the question. Some people might not like it, but I think the market needs it, quite honestly. But those are my observations. Anything you want to add, Andy?
No, I totally agree with you, Steve. And also, you guys, we talk about support and resistance. When support is broken, how that comes resistance when you're heading back up. Well, I think the same thing can be said about that 50-day moving average. That 50-day was very strong support. So now, if we do get a bounce, that's something I'll have my eye on. How does it react when it does meet with that 50 again? Because that was very strong support. Now I think it becomes a resistance if we try to, make it advance higher. Another thing too, I brought to Steve's attention earlier today was Apple. When's the last time you've seen Apple have a tape like this for basically 10 days in a row now? Basically, you've had maybe one up day in the last 10, and I didn't go back and count them, but you're talking about the most widely held stock in all mutual funds. So I often keep an eye on that as a barometer, along with the SPYs. But I think this market's going to have a really hard time bouncing at all if you don't have Apple participating. And you can see it did not really participate much at all in this effort yesterday and then today, where we tried to move higher. So Apple couldn't even take out yesterday's high. So keep an eye on Apple. I think, like I said, if you get some serious mutual fund selling, obviously Apple's going to be one that they're selling, because it's like I said, it's the most widely held stock in all of the mutual funds. But other than that, Steve, yeah, there's some great observation. Like you, I feel like I don't feel like a move down to that 200-day moving average would be, I think that'd be easy. No, I think it'd be easy to do, get to too as well.
Well, Gabriel's bringing up a good point. I don't use the 100 anymore. I kind of used to, but yeah, the 100 is now acting as kind of a backstop for the 50. Mm-hmm. It's not perfectly clean, but it's close enough in the neighborhood there. But yeah, good point, Gabriel. Thanks for bringing that attention out. It's really all fanned out here: 10, 20, 50, 100. All right. So you want to talk about the AI and grab it?
Sure. I'm just going to talk a little bit about it, because I know you're going to go over basically each one of the alerts today. The observation I want to make, since I know you're going to cover it, is, and I think, guys, if this is not your style, you might want to think about it. And I know you've heard us preach about this over the years, but at some point we're going to get to an ugly, long, extended bearish tape. Okay. And if you keep trying to do what you've been doing, you're going to find that it's probably not going to work. Our AI is a great example of the day. Look at the top two trades of the day. They were both stocks that were up on the day, and they were fades. Okay, so you had this ATAR, nice little fade here, almost got to the stop but didn't. And then AXTI, same thing. Okay, it was green on the day, and there was your sell signal right there. Had some nice, some pretty decent. That's not a big mover I can see now, but the point I want to make is I've been doing this the last several days, and like I said, most of my good trades have been on fades like this, especially some of those pissants, I call them, those junk stocks.
I'm sorry, Andy, I stepped away for a second, but your screen isn't being shown.
Oh, wow.
Sorry about that. I had to step away for a second, and I came back and I realized everybody
that's strange. It's showing me as being shown. Let me see.
Let me try. Maybe.
Let me take a check, give it to you, and then I'll grab it back.
All right. Okay.
That's very strange. Let me try it again now.
All right. Try it again. It says trade of the week, presenter, Andy. It's like you're trying to get it, but it's not sharing your screen.
People are right, we're ready to show. Okay, let me hit this button. I've never had to hit this button before. Let's see if that works. No one can see your screens. That is strange. I've never had this issue in all my years of using this product.
Yeah, it is weird. They see mine, but not yours.
Well, wait, are you still seeing? Are you seeing Steve while I'm talking?
No, we're seeing the trade of the week webinar slide. The go-to webinar slide with the access numbers and.
What? Let me try one more thing, Steve.
All
Let
right.
me switch it over to you,
All right.
and then let me try showing my screen in and
Yeah, it just
clean
brings up the,
monitor. Let me do the clean. Hold on. Same thing. Still
yeah,
just
it
showing
just
the
shows
slide.
the trade of the week webinar slide.
That's weird. Well, anyway, what I was
You want me to
telling them,
pull up
Steve.
something?
Yeah, no, yeah. Pull up. What I wanted to tell them is the two best trades of the day were actually fades. That ATAER
Uh-huh.
and
Okay.
AXTI.
So
Option.
ATAR, there was our entry right there.
Mm-hmm.
Okay.
And then you got AXTI. And what I was kind of trying to drive home is if we do get into a bearish tape, which is very possible, these are the kind of trades that can really work. As we talk about being able to have a backhand, if you do get out of a bull market and the tape gets very difficult, a lot of your fading strategies can work because the stocks just don't have the okay, you got more sellers than buyers, obviously. So you can really get in trouble, chasing momentum, when you do have more sellers than buyers. Naturally, it just makes common sense. And but anyway, yeah, we'll have to work on this and see why that was not working.
Oh, there we go. I think I wasn't even showing my screen.
No,
Okay.
that's all right.
So yeah, there's the AXTI. So let me elaborate on what Andy mentioned a second ago. He used an expression. He said it's good for traders to have a backhand. If you ever played tennis, everybody likes to cheat on that serve and kind of scoot over and make sure that if you're going to have to return that serve, you got a good forehand because that's where your strength is. But good tennis players and good racquetball players, they have to be able to turn their body the other way and swipe at the ball with the backhand cross stroke. There's a lot of newcomers to the market who really have only seen this for the last 2 years almost, and they don't really know what a selling tape can last like for a few months. And so just trying to prepare people that, if the market does change, you can't just sit and cheat in the corner of the tennis court, forcing yourself to hit forehands. You're going to have to learn how to develop some skills on the short side. And that's what Andy was talking about and ATER was the other example, using the momentum and then going the opposite direction. We'll talk more about that in the coming weeks. But yeah, I'm with you, Gabriel. Let's bring on the bears. It's been an interesting run. All right, speaking of interesting, I'm going to move forward here since I've got the screen, and this is the trade of the week. We had 2 trade of the weeks to discuss, and wouldn't you know it, both of them did not fire. But I want to make them kind of teachable moments for the most part. The first one was Pixelworks, and I'm going to go back in the time machine. And what we saw here was a really nice move with great volume and great momentum, and it couldn't hold its 10 period. And I've often talked about the 20 period being the backstop. And if I go forward just one more, got to get it just right here. There we go. So this is what the image looked like going into the trade of the week weekend. It was stabilizing here at the 20, and the blue line there was drawn on 2 days prior, that high going back 2 days. That was our trigger line. So if PXLW was in fact going to hold the backstop and bounce and continue its trend line, we were going to use that blue line as a signal. But even before the market fell out of bed, this thing started showing its true colors. This day right here was just absolute messy. It would have been nice if it closed back above the 20, but it didn't. So that kind of put us on notice. And then it just never really recovered. And then we get to the point where it's deep enough into the week where it's like, this thing has given us 4 more days of candles here, and they're basically still both under the 10 SMA, which is rolling over and crossing, and it's under the 20 SMA as well. I probably wouldn't have recommended, taking this thing by Thursday or Friday if it did pop up and go through. And if we go fast forward now, this thing has never recovered. So this day right here was the truth-telling day. The stock was not interested in holding that support line nor bouncing back up and trying to make something happen. It just bled ever since then. And this is kind of a good placeholder. This is what I'm going to talk about in a little bit about the AI, is trying to find that signal candle, which saves us a lot of heartache, anguish, emotional capital, spiritual capital, financial capital. So that one never triggered, and it's off the board. So fast forward to this week, and remember this week, if I go back, we had, this was Friday. this was Friday in the general market, big down day in the SPY, also in the NASDAQ. So we didn't have a lot of good backdrop to work with. Additionally, what I got through talking about this chop here underneath the armpit of those averages. So we focused on something that, seemed to like maybe ready for a turn, and we go into the electronic vehicle sector, and the trade of the week this week, technically, still is RIDE, and if it would just let me type it in here. There we go, finally. Okay, you pull back a little bit. We're gonna go back, perfect, 2 days. This is what RIDE looked like going into the weekend. So even after a bad Friday in the general market, this stock was really starting to show, what I call kind of the bird in the hand, where it's breaking above, it's basing, it's breaking above these declining moving averages, and so many stocks have been getting hung up by the 50 SMA, this blue line. You can see on this day right here, ran right smack into the blue line. Well, a lot of stocks were doing that. They'd pop up and they just couldn't get above the declining 50. But the RIDE, Lordstown Motors, which is an electric vehicle, it's really been beaten up badly. And so if the market was going to not participate and give us a good backdrop, this thing, pretty much the damage has been done over there. So maybe the losses or the market action wouldn't be as bad as we think. So again, this is what it looked like going into the weekend. We drew the blue line across Friday's high and said, hey, this is 1, 2, 3 days. I talk about this a lot. 3 solid days of closing candles, not wicking and topping, tailing, and ducking back below that blue line, but 3 solid closes above the 50-day moving average, which a lot of stocks were having trouble doing. So it kind of had that look like, hey, if the market wasn't gonna, tank, maybe this thing was ready for a nice relief bounce, a nice relief rally. Yesterday was a horrible day, but you can see this was kind of the concept to begin with. A horrible day in the market didn't really translate into a horrible day in a stock that's already been kind of beaten up and trying to create sort of a basing pattern. And wouldn't you know it, I mean, it actually started to threaten possibly triggering today, but we didn't. So we're still under this blue line. We still haven't been triggered. I think as long as the price action stays in the general neighborhood that it has been the last couple of days, if it does want to break through tomorrow or Thursday, and you're in the mood to go long, depending upon what the general market's doing, this thing still is in play. But it's a very short-lived profit target. I think the profit target on this one basically was a quick move up to $9. So a couple dollar move from the high 6s, low 7s here, because what's going to happen is we've got this declining 200-day moving average, which very well could come into play. But for the most part, the congestion there roughly back here would be kind of just a day or two pop, could easily pop into those areas. We'll see, but I think it's really going to determine or be predicated on what's going to happen in the bigger picture. There's bigger fish to fry in the market right now, and it's really going to kind of dictate the price action, I think, all around. So those are the 2 trade of the weeks that did not trigger. I can't remember the last time that has happened, but when you take into context the bigger picture here, not a lot of longs are working right now, I would imagine. Some of the longs that Barry and those guys trade in the live trading room, they're in a different time frame than I am. They're in and out, quick hits, quick scalps, day trading. I and myself and Andy, who's actually been day trading a lot more lately than I have, we're more slower paced swing trader guys. So I'll just leave you with the fact that RIDE is still open. It very well could trigger tomorrow, and you never know. It could be a quick day and a half hold, and then jump out like a surfer, do a couple of cutbacks, and then bail out the backside of the wave, and then position for the next opportunity. All right, anything you want to add there, Mr.
No,
Andy?
no, I just definitely some good relative strength there in
Relative
RIDE.
strength.
Yeah, so we'll see what happens.
All right,
But
before I dive, I'm sorry.
Go ahead. No, never mind.
But before I jump back into the AI and try and instill some wisdom there, going to do a little bit of teasing here. Let's see. I've got this tab open. This is an internal tab, and let me explain what the ME, Market Explorer, is. Basically a tool that we've always kind of had, but it's not something that's facing the public, the user interface. I mean, it'd be like trying to get me to learn calculus, and I just can't do that. I don't know. I'm not that great at that stuff. But fortunately, we have a couple of people here that are good at it, Michael Noss being one of them. And the Market Explorer is essentially going to be a way in which he can hard code an event, a setup. And these are some of our current focuses on. I just want to let you guys know what might be coming down before our next test drive. We might have a few of these. For instance, I think he's got one that like an 8 EMA crossing a 20 EMA on stocks that gapped up. So they're very specific in nature. And it's not something that can be tweaked. It's just essentially going to look like a top list, but you come over and you right click over there and you have a menu of pre-canned, I'll just call them pre-canned ideas. Some other pre-canned ideas that we're working on is like the daily bull flag. A lot of people ask, and we have kind of a basic one that we've used with the parameters of what we have to work with, but this Market Explorer tool will allow Michael to go in and hard code this stuff with his magical math wizardry and create a menu that where you can click on and say, hey, click here if you just want to see. No configuration required, but these are going to be all the daily bull flags, bullish and or bearish. So that's going to be coming. He's also going to hard code the TI strength alerts, those 5 stocks that come out each Sunday night. He's going to open that up so where you can see every single day some ideas coming through in that universe. And I think he had some other ideas too, but these are the basic starting points that we're going to work with. And these are, typically highly requested setups, especially some of those crosses like the 8 EMA crossing the 20 EMA. So, I mean, you guys are welcome. If there's something on here that you feel like we don't have that you would love to be able to have hard coded using our internal Market Explorer, you're always welcome to email us there at info@trade-ideas.com and, a feature request for the Market Explorer. Hey, you guys, one of the things I added that I want to see is the head and shoulders, tops and bottoms, higher highs followed by a lower high on the upside or a higher low on the downside, trying to find inverted head and shoulders. You could probably even make a case that this ride is kind of an inverted head and shoulders, and the head and the shoulder and that kind of stuff. So we're going to be playing around with that, and the purpose of me bringing it up is just to kind of tease you guys a little bit about what some of the new features might be coming down the lane. And if anybody does have something that we didn't think about that might be a popular request, you can let us know and we'll add it to that spreadsheet. But our next test drive is coming up a month from now, or less than a month from now, and we hope to have a few of those new features coded in there. All right. Okay, so I'm gonna spend a little time talking about what I did on the onset, about human and machine working best together. And there's just a really excellent way to demonstrate this, and that is the 2 basic modes of our AI, the conservative mode and the moderate mode. So just to rehash, conservative mode means I don't want to do any thinking. I don't want to manage my trades. I want the AI to tell me when to get in and when to get out, and I don't have to do any thinking. Well, that's okay, but we literally see empirical evidence that shows moderate mode, where the human gets involved and basically allows the value of the AI, which is the entry time, price, and symbol in the moment, giving us an idea for an entry. But from that point forward, it's a constant change of nuances of new data coming our direction. And I want to show you just a very simple way. Some of you, this will just be repetitive because I talk about this a lot, but for those that are looking for just a very simple way to manage risk and to manage a trade, I think you'll find that you'll do much better if you take these AI ideas in real time and use the entry. And let me show you something on how to manage the trade. So I'm going to open up the intraday thing here a little bit more. And we're going with my 15-minute chart. And my 15-minute chart has the 10-period simple moving average. And we can see a couple things. Yesterday in the S&P, the SPY, sideways action into a moving average such as the 10 SMA, is why I call it the momentum line. That was the moment in time that the price got forced lower. A little later in the day, the price came back up to check itself again. The momentum was still too strong to the downside, threw the price back down to lows. Towards the end of the day, as it often happens, this thing starts to break down, but we closed above and had a decent close. Today was a little bit more wishy-washy, found some support after gapping up there, but gave it back there, reclaimed it there, and kind of gave it back. So not a real great example today, but it's better when this thing is showing you the footprints of momentum rather than chop. It's not going to be very effective in the chop. But we can go through these AI trades one by one. I can kind of paint a scenario for you of probably the best way to manage them. If I was taking these trades, this is how I would be managing them. But again, I'm not a day trader. I kind of know what I'm looking for. I've got my own scans and my own wheelhouse. But we're going to start with the first one here, NEOG, which is a long. And just to orient yourself, there's the up arrow telling us it's a long. This blue line right there is pretty much our entry point, and there's our buy tag right there. So right off the bat, the first thing I do when I look at these entries is I would say, well, here is the suggested stop that the AI gave, but it's really nothing more based on just data, historical, and an arbitrary, not so arbitrary, but for the most part, it's got to put it somewhere. But what I'm suggesting is if you incorporate this 10 SMA into your trading, you'll be able to manage risk a lot better. You won't be taking big losses because 9 out of 10 times this moving average is really going to just give you the guiding hand of what you should be following. So let me clean this chart up a little bit. So the first test really of the day was right there. The trade was underwater for a little bit, but again, we don't want to concern ourselves with the suggested stuff. We want to concern ourselves with where is the first candle that closes on the opposite side of this moving average. And there it is right there. There's our signal candle, the doomsday candle, or the candle that just pretty much tells you the momentum is broken. Ideally, the stock should have continued to bounce and move higher if it wanted to for the rest of the day. But you can see if you use that candle right there as you're out, you're taking profit. You may have left a little on the table, but you'll see that the price never got back above the momentum line. And that's a very good example right there of how you can quickly tighten up the suggested AI stop and just wait and see. And obviously the idea is to try and keep yourself in the good trades. They all say let your winners run and cut your losers. Well, how do we know to let our winners run? Well, what I'm suggesting to you is a very simple way to sit on your hands and don't make a decision. Human and machine. The machine gave us the idea. The human is watching everything develop in real time. And that signal candle right there was probably a decent out because it closed lower by the end of the day. Let's look at the next one, which is a short. So we got to flip upside down here. There's our signal candle pointing down. There's our blue line. First thing I'm going to do is say on this short, let's just forget this right here. But this one has a little different context to it because the trade started off above, right? So this is, if this was a long, it did everything we were asking for. It bounced right there, held its shape, sideways action, held its shape. But the AI was suggesting this one was a short for whatever reason, statistically probable. It was a good short. But what you could do is you can look at the line in this case and go, excuse me, boy, that candle right there really should have broke that upside momentum and given me the short action that I wanted, but it didn't. Kicked the price back into play. Okay, well, back to our entry, it went sideways, started to move higher out of that sideways pattern. That probably would have been a much better place to draw the line and say, based on all the new information I have, I'm getting out of this trade here. I'm not going to just let it ride out up to there. So another example of how you can use the 10 SMA on a 15-minute chart to help you simplify your risk management decisions. Let's go to the next one, BMRN. This one's a long, and this was a pullback long. You can see it came back and actually suggested that we buy under. Okay, in this case, it was actually under and later in the day. Well, not too much to gather there other than that stop is way too far lower. It tried, got above, and then it failed. And by the end of the day, no real harm, no foul. Let's see if we can find some good examples here. All right, so we're back on the short side. And this one did the same thing that other short did. It started off above our moving average momentum line. Right there, it tried to break lower but couldn't. But still roughly in the ballpark. This one is definitely a closer stop out, but never hit it. This was the candle that kept us in the game right here. This one, a big red candle that broke through the momentum and said the upside momentum is hereby declared over. And it certainly was. Look at how that just to the T, 1, 2, 3, even that candle couldn't close above. So for the remainder of the day, once the price broke down below, and this being a short, this is what we wanted, it should have kept you in the trade. Very last candle of the day was the first candle that broke above. Probably a good reason to get out of that one. Oops. Let's see what else we've got here. And again, we're just going through trying to see how the human can manage these trades better than a start of day statistically weighted line that the stop is given to us. Okay, so this one early in the day popped up in the money, pulled back, got about the midpoint there before the of the stop area, but the price did exactly what we would hope. The rising 10 SMA forced the issue of the price higher. And this is a good example of why I say wait for the closing candle. There's a couple of ticks there, but the end of the 15-minute candle period popped up and closed above our signal line. Did it again here and again here. Waited all the way till the end of the day before it gave us a actual breakdown closing candle below the 10 SMA. All right, I'm going to go through a few more of these here. Yes, Mark, the webinar is archived. It will be recorded and it'll be on our YouTube page probably by tomorrow. So you can come back and check that out if you miss anything. But as I go through a few more here, we'll finish up with what I usually do, and that is, what do you guys want to look at? If you want to start typing in stock symbol, no more than 2, please, for each person. I'll go through them in the last segment. Andy and I will look at them, and we'll give you their unbiased opinion of how they really do look. Could be some interesting ones out there. All right, so we did QS, which was a great example of using that momentum line for the long to keep us in a trade. What else did the AI served up? Served up a long in INCY. Okay, so it was a pullback buy. Oh, look at that, we were under our moving average to start with, so kind of behind the 8 ball. It never really went lower than the buy price. You can see it tried, the 10 SMA tried to put it down, but the price held firm and closed above there in the final 30 minutes of the trading session. A couple more here, MKC, what can we derive from this? This one's kind of a mess. There's our buy, and the AI quickly got out. The AI said, hey, we're in the money up here, but we don't want to give any back. So it looks like the AI bought and sold quickly for basically a flat. But if we were staying in this trade, you know, I think the real signal candle was this one right here. That one just broke below and it never really got back above. So the point is if you can identify these signal candles early, it's going to save you a lot of mental, emotional, financial capital and focus for the remainder of the day. Let's finish up on this one. So this one, AXTI, oh, okay, so it's a short, and it was actually up on the day. This is the one Andy was talking about earlier, kind of fading the ones that were up and trying to, you know, pick off a contrarian type of a move. So there's our entry, and right off the bat, it did exactly what we wanted. It sold and broke that moving average and gave a nice spike down here, and then bounced back, and then kind of closed above and then chopped back down. But for the most part, on a sell, on a short sell, you really want it to break that moving average, so you've got in the back of your mind a peace of mind that, yeah, the upside momentum looks like it has been broken here, and I'm going to try and ride this thing short as long as I can. All right, so those were really the best examples from the AI. Again, just trying to remind people human and machine are the best relationship. The AI's value really is in bringing ideas to our forefront in real time with a symbol and a price, because, you know, let's face it, there's 8,000 or so stock symbols out there, and especially new traders, they don't really know where to focus. And so it's a great symbiotic tool to let the AI help you with selections, but use this chart parameter with a 10 SMA on a 15-minute chart to give you that moment in time when the momentum really has broken. And what I will do is I will save and share this cloud, which is my 15-minute chart, and I'll drop this configuration into the chat window for anybody who just wants to do it and grab it the easy way without configuring it yourself. So there we go. That's in the chat window now. All right, let's see what's going on here.
I think Gabriel's just throwing out some stocks to look at. Let's see.
Nothing wrong with being in 100% cash, Dave. I'm almost right there with you. I've got a little bit of VIX on that I put on last week as insurance. Blew me out the last few attempts, but this time I'm going to hang on to it a little bit and see what happens. But other than that, I'm with you. And he's been doing a good job shorting some single names here and there too. Does the AI only alert during the day, or day trade, or will it alert for swing trades? Well, Kishore, primarily it's a day event, but a lot of traders that know what they're looking for will let those translate into bigger moves. I don't really have an example of one, but they start off as day trading ideas, and some of them can move on to swing depending upon, how well they close. All right, so let's back up here. Lance wants to talk about HLBZ, the one that we didn't have any float data on today, unfortunately. So this is obviously a day trader's mecca, lots of volatility happening, lots of gaps. The way it closed with this topping tail, I kind of feel like it's going to want to probably give back some more, and it looks like it's giving some back after market. That's a tough one. It just
Not a lot. You need more data after a big move like that.
Yeah,
You probably need about 2 or 3 more days for it to make some
that's
sort
a
of
giant
formation.
move.
Yeah.
The chart that I gave out, it's got this blue line here, which is my other signal line. You can see it was acting as a lid there and there. It's very well possible that tomorrow this thing could come down, and if you've got a 5-day moving average on your 15 chart, which is essentially just a 130 period, you might find some buyers if it gets to that point. Maybe it will, maybe it won't, but there's a lot of space in there and it's a lot of volatility, so it's kind of hard to get our hands around that one. Slava wants to look at INVA. All right, nice movement coming out of the consolidation. After hours push as well.
That was our trade of the week.
Oh, that's right. It was the trade of the week. Long time ago, trade of the week.
Yeah.
Because
Nice if we had that
34% short float on a not too big of a float, but this thing just took its sweet time and it just gave a lot of starts and fits, and yeah, it just didn't do what we wanted it to do when we wanted it to do it. But it's a good lesson in reminding people to keep these things on your radar, especially the short floats, because they can come alive whenever they want. Honestly,
you know what? That's a really good point that Steve's making. I mean, I can't tell you how many times we've picked a trade of the week, and for whatever reason that week it just crap. But keep an eye on these when they get back above those moving averages. This one obviously is kind of wacky. I mean, because I would have been tempted to buy it above that 20 period the last time it crossed it.
It's probably going to run in. It's probably going to run in, maybe even test these highs tomorrow. I'm getting close to it today, but I would, if you got profits in there, I'd be selling at least a chunk of it. We've had 4 green solid days and some after hours. This thing is going to run out a little bit of steam at some point, so you want to try and stay ahead of the crowd. Speaking of past ones, DSX, Diana Shipping, was working really well until the market just broke the back of that. I was literally watching it yesterday at the 20 at the backstop here, but the way the market was selling off, I wasn't in the mood to buy anything. You just got to throw everything out and let everything reset. But yeah, DSX worked for a couple of weeks for us. Sometimes they work. How often does the short float get updated in the single stock window? Well, it's updated every night, but the value doesn't change any more than twice a month. As I understand it, it's kind of a survey, like the non-farm payrolls. It takes a while for the brokers to get all the information to FINRA or the SEC, and so it's usually twice a month that the values of a single stock short float percent as a percentage of the float, it's usually twice a month you'll get that value to change, either up or down. But for the remainder of the days, it just stays constant until something changes. All right. So Gabriel, inverse to that, Adobe had earnings today. Feel it's overpriced. Well, let's just take a look since you're talking about Adobe, Gabriel. Let's bring in the daily chart again. It's been a nice trend, a sideways trend, but it's in the armpit now. It's fallen, it's broken down through its moving averages. It found support at the 50, but the 10 is curling over the 20. The price is now underneath the armpit. Some people used to call that in the pocket, bouncing up into the pocket. I like armpit. It's just more visually expressive and kind of sets the tone a little bit better. Yeah, it seems like it's a little bit tired, a little bit under pressure. If it gives away and breaks that 50-day moving average, then really watch out. It could be giving back some of that nice trend it's been showing. A couple more here. OSCR. Got to call that one Oscar. Yeah, Oscar Health. Nice little flagging pattern there, trying to break above the 50. I'd say keep an eye on this one. $20 might be a lid if this thing gets any movement over a course of a day or two, but I like that sideways flagging pattern. It's don't want to lose track of that, and it's doing it above its, doing it above its key moving averages. And what are we on? Insurance? Okay. These are the kind of things that give you that look where it could do something or it might not do anything, but it doesn't look bad. Oh yeah, David, TGB. Yeah, that one really broke my heart yesterday. Let's look at TGB. Was looking really, really good last week. Bang all the moving averages, slammed into its 200. And then yesterday, it just decided that it wanted to just give up 10% along with the market. I got out of it in one account. I stayed in it in the other. You can see my stop right there. It's not pretty, but that's my line in the sand for TGB. Oops, didn't mean to do that. I think I, here we go. I'll just leave it at that. I like the one with my averages. There it is. Okay, a couple more, then we'll bring in Scott. ConocoPhillips for Jim. COP really recovered nicely after yesterday's drubbing, and I think you just want to watch the energy sector. It's just probably begging for a reason to try and test that $60 pivot level. Didn't look like that yesterday, but a really nice recovery today. No earnings. Yeah, it's not bad. It's it's back trading in clean air, but we're definitely in volatile land right now. I would just maybe set an alert right there just above that high, just under 60, a price alert you could pop in there and easily be alerted to it if it tries to move. And then double check on the sector, make sure that the OIH sector is doing okay. Kishore, these are the afternoon webinars are kind of how to do stuff. What I highly recommend is the live trading room with Barry, and especially the noon Eastern time live support session where I'll be doing it tomorrow from 12 to 1 Eastern. You can come in and ask all sorts of questions. That's really the easiest way to kind of hit the ground running and let us show you how to do things in addition to a lot of the videos that we have. But you get, unfettered access to us between 12 and 1 Eastern each day. And a lot of people can come up with some really good questions to keep us going through that hour. So I would invite you to show up to those and let us help you get what you want out of the program. A couple more here, then we'll bring in Scott. Tesla was one of them, I think. Broke its key moving averages, but it's still in an uptrend. This one's a monster. I would see if it can get back above that curling 10 period moving average. If it can close back above that, that would be a good sign. And mRNA, do I think Moderna is going to do anything? Let's take a look. Not bad. It looks better than Pfizer. Nice kind of flagging pattern there. You could set a price alert right about there, and if it trades above, you'll get an alert. But that doesn't look bad. But compared to the sell the news, buy the rumor, sell the news of what Pfizer had going on, it looks a lot better than that one. That one's just breaking through all sorts of backstops. Yeah, FOMC tomorrow. You're right. They started today, Dave, and they'll make their announcement tomorrow. They'll probably just announce they're going to kick the can and give the junkie some more heroin. So don't hold your breath. All right, we'll do two more, OVV and then CRVS, and we'll bring in Scott. So OVV for Stephanie. Nice little pullback after a good move. Big twisted mess of the moving averages there, but it looks like it's respecting the 20 and the 200. If this thing, I'd probably just set a price alert as simple as that. If we can get back above something like that, you would consider these last 2 days as a healthy consolidation or a healthy pullback. Also crude petroleum. So yeah, if the energy wants to get going, that one could have something.
Actually, Stephanie had Kara.
Oh, Stephanie had Kara. Okay, I'm sorry. I didn't. Well, let's bring up Kara, and that was Linda who had OVV. All right, not bad. Therapeutics, pharmaceutical. It's trading back in clean air. What I initially kind of see here is, that was resolved, and you could probably even paint that. So it's creeping out of a pretty good triangle there. It might have a little more meat left on that bone. It doesn't look bad at all. All right, one more, then we'll bring in Scott. What was it? Can you take a look at Life or CRVS? Oh, yeah, CRVS. Well, I know what CRVS looks like. Life looks pretty good too. I bet that's following the 5-day moving average. It's not even letting the 10 moving average catch up to it. That and CRVS, those were the day trading darlings of the last couple of days for sure. I don't know what really to make of it on a daily chart now. It's expended so much energy, anything's possible. I don't trust anything more than a few days. So, you know, if you switch over to the intraday, look at what a great way to end this segment here. Look at where it found its support in the intraday. The risk management tool that I like to use, sideways action, is going to tell us, is that momentum going to continue? Well, it did continue into the end of the day, and then it kind of found support and closed right there. But after 2 or 3 days of that, you know, there's going to have to be some give back. So they get pretty squirrely and pretty volatile. I prefer things that have a bit more semblance to them for the most part. All right, yes, Chris, a good announcement. Chris has been doing, Chris Varley has been trying to kind of fire up a 3 p.m. Eastern session where he kind of relieves Barry and tries to get some end of day stragglers and continue the live support stuff. So if you're not aware, we are going to be doing some more 3 p.m. stuff in the live format where you can come in and ask questions and he'll show you whatever it is you want to see within reason. So good announcement there to end on, David Schultz. All right, so that's all I got for today. I'll see you again in 2 weeks, and we'll bring in Scott for any last minute announcements here.
Sounds good. Thanks, Steve. Yeah, on the way out, make sure you've got that strategy indicators ebook we released recently. Just go to trade-ideas.com/strategy and get the free download. It's written by Dave Mabe, our director of software development. It's got a lot of good insight into how he uses trade ideas, so you can do the same. There's a code, Holly Rocks, saves you 15% off your first month or year of any subscription or upgrade from standard to premium. So grab that code, use it before the end of September, and save some dough. If you have any questions, send their questions to info@tradeideas.com. Goes to our help desk software, and you can find Steve on Twitter at TISteveG. We also have @TradeIdeas, @QuantBot, and some other handles that you can locate. If you find one, you can find the others. Trade Ideas Pro is the Facebook handle, so check that out and like our page if you're on the book. And the recording of this session will be up later on tonight, and you get an email reminder tomorrow with a link to the playlist. So thanks, Andy. Thank you, Steve. Have a good one.
All right, see you next time.
Thanks, everybody. I'll see you on Thursday.